Well, g'day and welcome back to wherever you're listening from. We're back for another episode of the StoneX Australian Cattle and Beef Market Report. My name is Ripley Atkinson and I'm the Australian Livestock and Commodities Manager for StoneX based in Sydney, where we're developing price risk management tools for the Australian beef industry to help the sector manage market and price volatility with our Australian cattle swap. We're brought to you by StoneX Group, a Nasdaq-listed global financial services network with 100 years of experience in global commodity markets. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. Been plenty happening in the past fortnight, but before we get into that, thoughts go out to those on the mid-north coast of New South Wales at the minute, dealing with some fairly severe flooding, like the Queenslanders were a couple of months ago. Thoughts go out to them. A few things this week. There's been a bit of data released, which I mentioned last episode. ABS pulled out their slaughter and production numbers for Q1 on Tuesday. Those figures and results, to me, really confirmed my view about where the cattle cycle's at. And I think across the board, production and slaughter volumes generally outperformed, the expectations. Secondly, something that's probably a little more current, but it's certainly a structural thing as well, and that's the actual supply of southern cattle and availability of stock out of the south this year has surprised people, me included. And I think that it's really kept a lid and a necessity on the southern processors to actually venture north in big numbers and buy cattle because they just keep coming at them in the south. The third thing is something I've mentioned on this podcast a couple of times, and that's some structural shifts we're seeing in buying behaviour and patterns from feedlots. And I think it's a really interesting one, and we're starting to see that play out. I'll start with the ABS though. And yeah, the numbers, they didn't surprise me. I think it just reaffirms, my view of where we're going to in terms of, production and slaughter volumes. And when you look at the detail and the actual numbers themselves, they're all circling back to 10 years ago in terms of, performance and when the last time the highs were at. So it's pretty clear that we're on the way. But one that I did want to focus on in terms of a state was Victorian slaughter. Vic slaughter for Q1 was about 517,000 head of cattle. That was in the top 8% of quarters of all time, and it was the highest quarterly volume of Victorian slaughter since 1979, which gives you some context on a couple of things. The first one would be the investment the processors in Vic have made over the last 5 to 6 years in capacity and improving their ability to deal with numbers. There has been some big investments made by processors, and clearly it's showing now with the volumes that they're doing. The second thing would be this continual pull by Victorian processors of cattle out of the north. A lot of cattle are now entering Victoria and are being processed, and they're from Queensland, the Territory, and northern WA. And it's probably not something that's spoken about often. And I know it's easy to look at the high level numbers of Victorian slaughter and go, yeah, wow, the liquidation is brutal. And it is, like, they're certainly killing a lot of cattle, but there is a big contributor here, and that's those northern numbers being dragged by Victorian processors south to be processed and then exported, particularly cows. And when you look at where margins are and trim values exported into the US, you can see why they're doing it. And the cows are a really big part of that, which is obviously contributing to somewhat inflating the female slaughter rate in the south on a on a yearly or quarterly level because of the number of cows actually being pulled down out of those northern cattle regions. Taking a step back and looking at the broader picture, the Q1 slaughtered numbers at a national level, 2.172 million head. They were the third highest quarterly volume in the past 10 years. And what you usually see in Q1 is an actual softening. Northern musters have pulled up, or the north is in mustering, and the south is in, typically a period of calving, and cattle haven't actually been weaned yet. So it usually gets a little softer, but we saw a good strengthening in the kill rate compared to last year for Q1. And when you look at it compared to long-term averages, it's well up, which is a good indication of growth in the herd. A figure that I found interesting when I had a look at the actual detail, Q1 slaughter for 25 was 850,000 head higher than Q1 slaughter in 22, which was the bottom of the rebuild. It just shows you how quickly numbers can actually be rebuilt and now grow. It's interesting to even compared to last year, numbers are up by 370,000 head compared to Q1 last year on a national basis. It just shows you the actual growth and volume in slaughter-ready cattle, both grass and grain feds. And I think it's just really clear evidence. These volumes are 5 years in the making, in my opinion. We had the rebuild from 2020 to 22 nationally, and then there's obviously been a bit of divergence in different regions since then in terms of seasonal conditions and what influence that's had on whether people are, in the case of Southern Australia liquidating, or in the case of Northern Australia in 24 and now 25 continuing to grow the herd, which I've said was the case all along. And it's interesting to note that shift. Moving past those high level details, I did want to focus on New South Wales because to me, when you look at the numbers, it's probably been the best performer in the past 12 months in terms of slaughter volumes and how quickly it's increased its production. New South Wales kill numbers for Q1 were their highest level in 10 years. And I would say it's been the biggest mover. Even in Q1's numbers moved counter-seasonally. And what I mean by that is they actually increased when they should have declined, typically based on that spring calving herd where you don't actually have many cattle turned off. You get those numbers pushing through, particularly cows and the like, which New South Wales is known for. They start to move in quarter two when weaning happens and those cows are turned off at preg testing and whatnot. But it really has been solid, that increase in slaughter in New South Wales, and I would expect that to continue into the rest of this year. You should see some really big volumes in Q2 and Q3. Beef production, as a result of carcass weights, themselves I found interesting. South Australia's now got the second heaviest carcass weights on a state level nationally. Queensland still dominates because of its grain-fed sector. Its carcass weights lifted due to the season. But what was really interesting was South Australia's carcass weights rose 6 kilos, 7 kilos year on year, and to me, that's really reflective of the influence the grain-fed sector's having on Southern Australia, particularly when their grass-fed kill numbers are going to be quite low because there's not a lot of grass-fed cattle left down there. The other thing to think about is South Australia's, more used to feeding British cross cattle and Angus cattle, which lend themselves to longer days on feed, which lends itself to heavier carcass weights than your typical short feds that you see in Queensland. So that combination is putting South Australia having the second heaviest carcass weight in the country, despite its grain-fed sector and general beef sector smaller than the likes of New South Wales and Victoria, which I thought was something interesting to note. When you tie it with the fact that it feeds cattle, cattle that lend themselves to longer feeding programs, it does make sense. Victoria, on the other hand, its carcass weight's dropped 11 kilos to 294 kilos a head year on year. And, I think that's a pretty obvious reflection of the drought down there and the lack of weight in slaughter cattle. But also, the influence of more females, particularly light females, coming out of Northern Australia on trucks down south. Your Brahman cow, 400 to 450 kilos max. They're not your Angus cow at 550 to 650. And I think that lighter Brahman cow out of the north, or even the shorthorn crossbred, is pretty reflective of dragging that carcass weight down alongside the dry conditions, which are limiting, limiting carcass weights. Beef production, Q1 this year, second highest on record. As I mentioned, carcass weights are the driver. And alongside that, New South Wales and Victoria had record production volumes as well. Moving past the nitty-gritty of those numbers and detail, which I found pretty interesting, but looking at a more structural situation, and it's something we've been talking about, or the market's been talking about a lot this year. There was calls from the market that the southern processors were going to move north, well before Easter, which generally is not, hasn't been seen or heard of before. But because of the dry conditions, I think we all thought, myself included, that it was looking likely to happen. When, and I've had a few conversations about it this week, when you actually step back and look at why they haven't, the obvious reason is, yes, the dry conditions have continued, but so have the cattle, and the cattle have just kept flowing. And I think it's a good thing to think about. It really reinforces that there's more cattle in the south again than we realise. And this situation, if we were having this conversation, 6 years ago in 2019, Northern New South Wales and Queensland kept scratching their heads and wondering how the cattle, where the cattle were coming from. But they did keep coming. And the same situation's now happening in the south. I, for one, thought the south, the southern supply would have cut out. It clearly hasn't. And obviously the drought has exacerbated that issue and just forced further liquidation and turn off. But the numbers are there. You're still having these really large yardings even, and supply of stock out of the south is strong. And I think it does, reinforce the point that the herd and the numbers, there's a lot more cattle around us than we realise. In terms of my view and what I think about the south and when it's going to stop, I would say my gut feel is the next month. Removing rain from the conversation, I think if you remove the weather, within the next month that they are going to run out, particularly those slaughter cattle and cows and any grass feds they've got left. I know the Gippsland's in better shape than most of the state, so there could be more cattle that were pulled into that region by buyers at the weaner sales and cattle that have been, put through for a trade. But I think those numbers will pull up in the next, as I say, in the next month. But if we add the conversation of rain and the forecast of rain for the south in the next week to 2 weeks and a wet June on the radar, in terms of markets and outcomes, I can really see light cattle picking up quite quickly. The confidence will come back into the southern markets really fast. Now, that doesn't necessarily mean they're going to have great grass growing conditions, because soil temps will be on the cooler side. You'll have frosts, things like that. So it's not an optimal time to be getting rain because they've sort of missed that autumn break window. But I think you'll see some confidence in the job, and I think the light cattle will respond, as a reaction to that. But what's more important, I think, is the reduction you'll see in available supply of slaughter cattle, be that cows and grass feds. And as a result, I can see the southern processors moving north, to operate overnight to fill requirements, because the rain will dry that finished or slaughter weight cattle supply up really quickly in the south. And in turn, I can see some upward pressure on the finished cattle if it does rain really quite quickly. And watching the next 4 weeks of markets and weather will be really interesting. The third thing I wanted to get into this fortnight is that feedlot buying behavior dynamic. And I've mentioned it on the podcast before, and we're starting to see it play out. And that's feedlots stepping out of Angus feeders back into Angus heifers or crossbred cattle, be that Queensland flatbacks or British cross, to mitigate and limit their risk in terms of margin generation in the feedlot because of how dear Angus are getting. You know, Angus feeders delivered northern New South Wales, southern Queensland, every bit of $4.40, in places a bit higher. When you can buy, you know, crossbred Queensland crossbred cattle at a 70-cent discount to that, or Angus heifers, you know, anywhere from 60 to 80-cent discount to that at feeder weights, and obviously the British cross cattle are in there as well. It's money talks, and when you've got to pay such a premium for the Angus steers, it's clear that the feedlots have started to move back towards those other stock types to go into feedlots. There's plenty of those other numbers around relative to the Angus feeder, which is getting so short, and it's just it's interesting to see that dynamic starting to play out. I think what it does say too is, you know, this is the market dynamic and the buying behavior of the feedlot, but what I think is interesting is it really points to a short-term trade if you can find cattle with weight and get the weight on them and push them into the market quite quickly and get a higher turnover and add some kilos on a quick turnaround trade. You've obviously got to buy right, but I think that's something to consider, you know, particularly on your Angus heifers and British cross and flatbacks. If you can be turning cattle around swiftly, probably more so the Angus heifers and British cross, I would say, than the Queensland crossbreds, because there's so many of them around. But it does point to the opportunity in shorter term trades if you buy right and look hard enough. And I get the feeling a lot of producers are looking long term, and I'm talking sort of plus 4 or 5 months for a trade, you know, into the second half and turnout of this year. And yeah, particularly any of the cattle gone right into central Queensland, you know, sold in Q1 of next year. But it does, these little market dynamics and cycles playing out in front of us at the minute, I think do point to some opportunity in buying heavier cattle for a shorter trade. But, you know, talking feedlots, the elephant in the room is to me is still the southern feedlots haven't come north to source heavy Angus feeders yet. And that, I think, is the big ticket to watch. Whether, you know, the southern guys, like some of the northern feedlots, are starting to choose to go back into British cross cattle and Angus heifers, they may, but even those will be, you know, in general short supply, because of, you know, the turn off of lighter cattle, which have all been bought by northern producers because of the dry down there. So I think watching the buying behaviour of the northern feedlots and where they choose to purchase stock and what category type, but particularly it's whether those Angus southern feedlots, you know, start venturing north in the next couple of weeks, particularly if it rains and supply dries up further, to access some numbers, because there's none down there and they all went north of the border at the weaner sales. The other thing to think about is the way feedlots potentially get around these issues is loosen the specs up to try and draw cattle in at lighter or heavier weights, particularly lighter weights in the south. That's another way that they're trying to manage it, and then also lengthen days on feed. But that feedlot situation at the minute, you know, both in the north and south, is really interesting, and I'll be keeping a pretty close eye on the buying behaviour of both regions and what the southern guys choose to do. That's all for this week. Questions are always welcomed, so if any of the listeners have got one, send me an email to ripley.atkinson@stonex.com or record a voice note of yourself, where you're from and the question, and we'll answer it in the next episode. Next time, I'm really looking forward to this one. We're fortunate to have on Cyril Close from TopX Roma and TopX Australia. Cyril's been in the agency game for over 30 years in Queensland. Really looking forward to having a chat with him about markets and his perspective on where things are at in different places and what he's seeing. So until then, thanks for listening. Take care, and we'll see you next time. Cheers.